I think that the reason that we had such a muted reaction, particularly last Friday when we had the the announcements regarding potentially incorporating other countries' VAT or GST regimes in terms of calibrating what might be appropriate as far as reciprocal policies, were that to eventuate, I think it has very profound implications for the global economy, and with that downside implications for the Australian dollar. I think it was merely the fact that accompanying those comments from President Trump were the statements that nothing was going to happen at least before April. So markets are notoriously bad at pricing in fat tail risks, if you like, for things that haven't yet eventuated. They'll deal with it when they're confronted with the reality. So the fact that we've sort of kicked that can down the road, I think, for a couple of months, and the actual tariffs that have come in so far are literally confined to that 10% on China and the steel and aluminium tariffs. We wait to see what happens with Canada and Mexico in a couple of weeks' time. I think that will be the next acid test for markets being adequately priced, if you like, for tariff risks. So I think it's more about something bad that may well happen being postponed, rather than the market really getting sort of a little bit of fatigue, if you like, as far as tariff news. Because if we are going to see large-scale tariffs, it will have a negative impact on the global economy, and it will have implications for pro-cyclical or growth currencies, of which the Aussie dollar is very much in that camp.
I also want to get your sense on the dollar pullback. What is it telling us, Ray? I mean, I know a large part of it, everybody's saying, because the tariffs have been delayed, the strategy from the Trump administration seems not so aggressive at this point in time, or a little more open to, some sort of finding some sort of balance. So how do you look at the pullback?
Yeah, certainly I have some sympathy with the view that what we've heard so far and the delays, give some reason for optimism that tariffs could be ultimately negotiated away, rather than being seen as a purely a revenue-raising measure from the US, and therefore will have to have some kind of semi-permanence about them. I think there's a little bit more to the dollar pullback than that, and certainly if you look at how the economic numbers have played out for the US so far this year, and also other parts of the world. So if you look at something like an index of economic surprises, you'll actually see that they've turned negative in the United States for the first time this year, whereas they've actually been improving in the likes of Japan and even the Eurozone to some extent. So if you look at those sort of relativities, I think it's causing some questioning of this US exceptionalism narrative, which was obviously the hallmark of the fourth quarter of last year and which drove the dollar on to the highs that we've seen. So I think the pullback is justified, but whether or not that US economic exceptionalism story is dying a death, or we're just seeing a little bit of a temporary hiatus in the relative outperformance of the US economy, I think is a very open question. But while the tariff issue is sort of a little bit kicked into the long grass, well, perhaps not long grass, but medium length grass, and we're seeing the economic numbers evolve the way that they are, then I certainly think there's scope for a little bit more slippage in the US dollar, bearing in mind also that I think the trading community is still running a pretty extended long US dollar positions.